Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
We've reached the end, folks. This is the end of misplaced confidence. Misplaced confidence in the dollar, misplaced confidence in government debt, and misplaced confidence in the paper economy. And Andy Hoffman's been writing about this for years. I'm in Florida right now, taking a much-needed vacation, so we're going to have to settle for a Tuesday rant, which is not as intense as a Monday rant, but Andy's with us now. Hey, And, how you doing?
Good. There's never time for vacation as the end game approaches.
I know. Well, I only went for 4 days, for crying out loud. And what happens? I mean, just talking about the gold and the silver, gold breaks the magic 1630 resistance point today pretty resoundingly, and silver breaks $29. And we're talking, Tuesday, August 21st, 2012. So we're seeing some pretty... From a very technical standpoint, which I suck at day trading and short-term trading, but I watch the indicators anyway, that's pretty positive, isn't it?
Right, and as you know, I believe that short-term technical analysis has zero net worth. In fact, I think it's negative net worth because it's so manipulated. But the beauty of all the manipulation is it creates some of the most astoundingly resonant long-term charts, such as the massive support that's been created at gold at $1,550 to $1,600 this year, and silver in the $26 to $27 range, by all of the attempts to knock it down. And the same goes for the incredible pennant formation in Euro gold, which, believe it or not, is going to hit 12 months old in September. I've never seen anything like it. And of course, it's now gold in euros is 4% from its all-time high and getting ready to break out. So if you look at those long-term charts and combine them with, of course, the fundamentals and now the seasonal period, we're heading into the time of year when gold and silver is the most physical buying, mostly from the Eastern Hemisphere. It's hard to believe that we're not going to make a run at last year's highs sometime in the next few months.
Yeah, last year's all-time nominal high. And I don't know if you heard the news, they're building a 1,000-ton megavault in Hong Kong to store gold, and the pace of Chinese imports of gold, and in my opinion, it's probably silver and platinum as well. One thing we never talk about is platinum because it's kind of an irrelevant. It's so small, and it's really not a monetary metal, but it is a precious metal. So you watch it just to see as a relative measure. It was under $1,400 an ounce last week, Andy. Now it's over $1,500. It has been blowing up, and that's an uncontrolled market for the most part, as much as there is one. So you combine all those factors, like you said, and this could be the mother of all rallies.
Well, as for platinum, part of the reason is you've had major unrest. They've shut down a bunch of South African platinum mines, and that's where the majority, in fact, almost all the platinum in the world comes from South Africa or Russia. So they're having, the kind of mining unrest that you expect around the world there, as well as in Peru right now. They're having some major unrest, and that's part of what's driving platinum. But at the same time, it is a precious metal. And ultimately, it's going to move with gold and silver. It typically is traded at a premium to gold, and right now it's at a discount. I'm not sure if it's going to recapture that premium, but I'm pretty sure it's going to move directionally with gold going forward. As for the Chinese, of course, they've been buying so much gold that the numbers are really astonishing, and it makes it even more clear to people that the paper market's clearly being held down because it's just not possible for that much physical gold to be bought without the price not going significantly higher. And even a PBOC governor just, I think it was 2 days ago, wrote an article saying we should be stocking up on silver as a strategic metal. Not that they're not doing it already, but they're acknowledging in the press. And again, this time of year with the fundamentals going on and the thin markets are not going to be so thin come 2 weeks from now. It's hard to believe that some very interesting things won't be happening in the coming months.
Yeah, my feeling is when gold breaks 1,700, silver breaks 30, and silver is a lot closer to breaking 30 now. It's up 52 cents, 29.33. When they break through those two numbers, and they're going to do it very close together, I think, then there's really nothing holding them back. So, and then you've got the other impetus, which is the diminishing, the falling Treasury bonds, right?
Yes, it's the biggest story that's going on in the markets right now. And as usual, there's no reporting on it at all. In fact, the only things you'll see, and that even includes zero hedge, is they'll put out articles talking about, well, if the economy is improving, that's what you get. Now, anyone who's going to say the economy is improving is out of their mind, because pretty much every economic number we see is massively horrible. And that's just in the States, let alone everywhere else. And even the ones that are so-called better than expected are A, not that good to start with, and B, they're fraught with holes in them, like the seasonal adjustments they've been putting into retail sales and NFP payrolls. In fact, I wrote after the NFP payroll report 2 weeks ago, I wrote, how is it that the seasonal adjustments are always positive? I mean, isn't there theoretically an offset? And sure enough, when retail sales came out last week, they reverted the negative. It's always a negative seasonal adjustment in July. Well, they made it positive. So for now on, for both NFP payrolls and for retail sales, all seasonal adjustments are positive.
Amazing, huh? Isn't that great? We're living in the best of all worlds, and I'm looking at zero hedge. This guy Lockhart from the Fed, here's the headline, Fed's Lockhart kills hope of further Q easing. And nonetheless, QE3, it's not going to happen, and yet the markets, gold and silver, telling a whole different story, and the government debt going down, as well as all the fundamentals, which are just horrendous. And you know that they're losing control over the spin cycle of the news as well.
Look, everyone knows the whole point of QE and extending Operation Twist and extending the period of ZIRP, which they've done recently in both of these, is about keeping interest rates low. When you have months and months of shadow inventory of houses and you're trying to desperately turn around, I just wrote today in my piece that I think it's 50% of all mortgages in America are effectively negative equity. So if they can't keep interest rates down at nothing, all that's going to blow up 10 times worse than we've seen it already. And I assure you, the rates are not going up because the economy's getting better. This is this is staring at everyone right in the face. It is massively, massively negative for the economy. And as for zero hedge, who, my readers know I have a love-hate relationship because they do so many good things, but they also have a blind spot for very important things, such as gold manipulation. And in this case, the obvious, putting up Lockhart, some Fed governor basically saying, maybe, who knows. I mean, take a look at Zero Hedge's website. Take a look at who the number one advertiser is on that site. By far, it's the Obama campaign. It's on every page.
Is that right?
Yes, it must pay him thousands, tens of thousands of dollars. So all of a sudden, a lot of those articles seem to be spun with the no QE, and it's no coincidence to me.
Yeah, you're so cynical, but I'll tell you what, you just see that this whole thing just appears to be unraveling. The news out of Europe, it's been rather subdued lately, but nothing's changed there as well. Oh, and one other thing we didn't talk about, but we should, is the muni bond collapse is finally really coming. Buffett just dumped his whole coverage of munis. He was going to be the insurer of last resort of municipal bonds, issued by state, city, local governments to further waste your money and build projects that often are useless and badly thought out that the private sector could do better. But Whitney, she called the real estate crash, and now she called the muni bond crash about a year and a half ago. Here we are. It's coming.
Well, but Buffett told us don't bet against America, right?
Yeah, but betting against the elite is not necessarily betting against America, and betting against the government is always a safe bet. It's just that it takes time, and you could go bankrupt being right at the wrong time.
And the beauty, you're talking about the subdued news in Europe. Well, of course it's subdued because, one, they had the Olympics for 2 weeks, which, by the way, was not a financial windfall for London, as it turns out. They didn't do too well.
It never is. Those events, it's like building a stadium. It's a scam. It's some kind of prestige thing that has absolutely no long-term lasting effect, even if it has a short one, which is always debatable. In New York City, it's like, oh, we have a convention center. Well, it seems the only ones that make out on the convention center are the parking lots right around there because they charge $50 a day. It's a scam. I mean, people get taken in by it. There's no economic net gain from any sporting event or sporting venue. That's proven over and over again, right?
I've written numerous articles about the stadiums and how they dump them all over the citizens. People in Houston are still paying today, 10 years later, for those football stadiums, basketball and baseball stadiums that are losing the team's money. Yeah. And heck, the Miami Marlins. I mean, there's no city that cares less about baseball than Miami. And the owner colluded with the government to create the stadium. They changed the name, they changed the uniform, they spent $200 million on salaries. They're in last place and they're dumping the salaries. And this is just 3 months into the season, and they're already, the citizens are going to have to pay for this. And, but back to Europe. Again, yes, of course the news is subdued because everyone's on vacation. But if you read into what's going on, it's not subdued at all. It's the same stuff. I mean, it said today that Greece asked for money. We're out of money now. Today.
I saw that. Yeah,
and no
I saw.
One seems to care about that. Italy, this Monti guy, he's just all over Germany. Give us money, everyone. Yeah, I mean, it's really, really nasty what's going on. And it's only going to get dramatically nasty when people come back from vacation in 2 weeks. I mean, nothing has happened other than stock markets have gone up. In fact, European pigs have all gone up to their 200-day moving averages. That's all. That's all they've done. Yeah. And that's where they're going to stay because once people come back from vacation, and again, there's a mental condition. Everyone is exhausted from the past year. It's almost like a group collusion to like, look, let's just take this vacation because we know we're going to have more coming. Well, we don't mind if the government is there buying up the thinly traded markets. And, but people will be back, and they'll be back soon.
Yeah, and never forget that all crashes, or the vast majority of them, always occur in the fall for good reason, for the exact reason that we're talking about now. The A team goes on vacation in the summer. In Europe, it's all of August. They shut down just about everything. And then the A team comes back and they see what's really going on. And then, man, their thumb's on the sell button and it gets dumped. And that's what we're going to see with a little resistance where the governments all try to collude and stop it from happening. But we all know that only lasts so long. So anyway, Andy, we find you on milesfranklin.com. And to hear all of my interviews with Andy, we've got dozens of them on there now, just go to dozens. Financialsurvivalnetwork.com.